crazy.
Hello. Welcome back to Trading Weekly once again for Kaye literally said it just before the stream started. It's the last one of the year. 2025 is almost done. How you feeling, Kaye?
It's amazing, right? Can't believe this is the last live of 2025. I really cannot believe it. It's like I feel like the year just went by, just flew.
Oh yeah, it absolutely flew by. And this will be a bit more of a special episode today as well. So we're going to have our normal bits and bobs with the market and the upcoming things that are going on in the market, of course. And we've got our 2026 picks for the second time. If you missed our first picks, go ahead and watch last week's stream. Or I'm sure we probably got some content on it throughout the week as well in the past week, of course. Today we're going to be going through what went well, what went badly, and what we want to improve on for the next year ahead. So what went well and what went good this year, and obviously what we want to improve on for the year ahead. So stick around for that one. Maybe about 15 minutes or so, I reckon, 15, 20 minutes or so until it kicks off. But of course, all the normal stuff we want to do, make sure you subscribe to us on the Trading Weekly on YouTube. We really do appreciate the support. Make sure you put your stock requests in the comments now, or obviously throughout the stream, of course. But put them in nice and early, then of course you'll get that analysed a little bit later on. But just a couple of guys, obviously looking at the charts, giving our trading perspective, so it's not financial advice. I think that's important to say to end the year, of course. And obviously, a massive thank you for Wolf Literature's platform. We couldn't do without you. Shall we get started into the slideshow, Kaye?
Yeah, let's do this.
Yeah, well, I've actually let's tell the followers or viewers here how your Christmas was generally. How was it?
It was amazing. Spent time with the family. I just had good food and spent time with them, and it was like very relaxing time. And thankfully, we
That's,
didn't have a snowstorm on that day, so it
that's
was.
good. Yeah, that's the way it should be, isn't it? Spending time with family and obviously having fun with friends and stuff as well. So just having a good old chill out time. So that's good to hear. Nice one. Let's jump into the slideshow then. Let's get this loaded up. So December 29th tomorrow. Is it a short week? It must be, right?
Yeah, it's just so the January 1, which is Thursday, is off, and I believe either 31st or the 2nd. I think 31st you'll have a half day, so similar like last week.
Okay, yeah, that makes sense. I think 31st must be a half day, right?
Yeah.
Okay, let's move on to the next one then. We've got market overview here. Last week was pretty bullish for a lot of stocks. You can see NVDA straight out the gate there, 7%, well, almost 8% actually. Google up 4%. We've got Broadcom at the top there, almost 6%. Some bigger names as well. We've got Microsoft, Apple, Meta, all trading pretty flat. As you can see on the screen there, Amazon up 2.5%, and actually Tesla down 2.6%, kind of evening each other out there. Anything you want to jump out on the page here?
Well, I think the big news about NVIDIA buying off Grok, which is the for $20 billion, was a big news, but it wasn't covered as much on the mainstream. It flew under the radar. It was pretty hot topic on Twitter, but overall, I think we saw from the price action of NVIDIA, and I think we will cover that a little bit more further down later in the stream.
Yeah, so it's one of your picks, isn't it? Is that right?
Yeah, that's the
weekly
week.
pick.
Yeah, that's the
Yeah.
weekly pick for me. Yep.
Awesome. Okay, we'll move on then. It's a pretty green. It felt green. Obviously, it's a bit of a shorter week as well, so, but it did feel green, at least in my opinion, as well. And that's obviously reflected as well in the fear ingredient index. We can see here it's sitting nicely around about 56. Last week it was 49, so just below halfway. Do you think we can make a push up to kind of top end of greed here by the end of the month? Well, the end of next month, I mean.
I mean, it's going to be tough because you have what 2.5 days of trading for 2025, and then you enter 2026. My assumption is most of the institutional investors probably have already done the tax loss harvesting selling, I'm assuming. So we could see a lot more buying pressure. But again, you never know. I mean, we were sitting at what 50, 49 neutral, and now we are 56. So we could get to 65, 70.
Yeah, I mean, look at a month ago as well. 17, we were extreme fear. It's amazing what can happen in just a few weeks. On the left side there, we've got to talk through those. Actually, you did more towards your sort of area.
Yeah. So interestingly, even though we moved from neutral to greed, the put to call actually went up. It was 0.67, and now it's 0.7. So which means that there are a lot more puts that were open compared to the calls. VIX actually dropped. We were in 14.7. Now we are 13.6. So VIX basically has been dropping pretty, sharply. And SPY was up 1%, pretty flat. QQQ similar 0.7. Not much happening again this week. We'll only have FOMC meeting minutes coming out on 30th. But apart from that, there is really not much data coming out. It's going to be a pretty slow week from a volume standpoint. So you have to be careful with your entries and exits. You
Yeah, I
might,
was gonna
yeah, you might not have the same level of liquidity as you would see in other weeks.
I was going to say about the volume. Yeah, just be careful of the volume, of, and especially again in and out of trades, especially the smaller stocks. The bigger stocks may not be too much, too difficult to get into or get out of. But yeah, the smaller stocks, especially the spreads might be a little bit bigger. And the options, I guess, wouldn't be that good either with the lack of volume.
Yeah, the
Obviously,
spreads probably would be wider. I don't expect spreads to be that wide for stocks like Nvidia, but as you said, right, for bigger stocks, it's not that much of an issue. But let's say if you are swinging Zeta or ONDS or those
yeah,
high flying names which are low smaller caps, you will probably see the spreads will be wider, and
true.
you have to be careful with those volumes.
And would it be wise to say that obviously in the first couple of weeks of January there might be a little bit lower volume as well? Typically, people coming back to work and coming back from vacation, that kind of stuff, or do you think it will be go go go?
No, I hear like two different opinions. Right, this is a general idea that folks will be coming back. It'll be slow, but the other aspect that I'm hearing, and I kind of sort of agree, is you might see a lot more piling up, considering we have had a pretty bearish run for the majority of December. So you might see that, hey, a lot of tax loss harvesting has already been completed. So
Mm.
there's this narrative that's going on that we might start to see a lot more bullish nature very early in the first half. Not no sorry, first half of the quarter. Which so the between the first to third, fourth week of January, you might see a lot more buying in. Again, these are all speculations. Like we can all speculate what's going to happen in the future. Nobody knows. But keep in mind, it's going to be an election year. So the idea is that from the White House perspective, they need to make the economy look good
Yeah,
because
of course.
we're
Yeah.
going back into the election year. So that the logic says that we might see some all-time highs. I don't know,
Okay.
but we'll see.
Only time will tell. We'll get there eventually, of course. We'll move on to the next slide for now. And we've got our first charts of the day. Before we jump into the kind of details of the charts, make sure you put your tick requests in the comments. We haven't had many just yet, so I'll leave that up on the screen maybe while we'll talk through this this kind of area, shall we say? But yeah, on the left side of the screen, we've got the SPY daily. My Christmas charts are no longer okay. Sorry about that.
Yeah,
But Christmas is over, so you've got to move on. SPY daily on the left and the QQQ weekly on the right. Same sort of story really with the QQQ on the right side, which is we had a pretty flattish week as we just mentioned. But hopefully we can make a push towards that kind of 677 level, which is the next line on the trend-based Fibonacci. Well, I say hopefully, I don't really care which way it goes, but it would be nice for my portfolio if it does go that way, of course. But 677 is what I've got on the screen there. Maybe a bit more conservative, we can do about 670. I know it's behind the wolf symbol, but you can kind of just see it above the QQQ weekly there. And on the left side there, we have the SPY daily. And I wanted to point out the fact that it's only 1.4% to all-time, well, not all-time highs, it's already at all-time highs, but 700,
yeah.
which I'm guessing is 7,000-ish. So that kind of percentage can be made within just a couple of days, albeit maybe temporarily. Obviously, the pullbacks are a massive thing within the stocks. But yeah, what are your thoughts on this possible price action?
No, I agree. It's just 1.36%, which can be on just one day.
Is it? Well, yeah, exactly. So that could be. So we've got what, 3 days left of the year,
Two and a
trading
half,
wise.
2.5 trading days.
Two and
Monday,
a half.
Tuesday, and
Yeah.
Wednesday will be half day. Thursday is off, and Friday is 2026.
So we've got 3 days to potentially make 1.39% if is it Tom Lee that wants to be right there. I think it's
Yeah,
Tom Lee. It's a
exactly.
700.
Yeah.
Uh, so we'll see if he's right.
Tomley unfortunately did get a little bit flack from the retail traders, especially for the very bullish calls on not just SPY but on the Ethereum. Now, I don't personally follow crypto that much, so I don't know what's going on that front. But seems like I think Ethereum is not doing very well.
I
Along with
haven't looked, to be honest. I haven't looked. So I'm not too sure what Ethereum is doing at the moment. I know Bitcoin's about 87, top of my head.
Yeah, I think
Yeah.
Ethereum is like, if I'm not wrong, like around 3,000. I can check right now while you. Um, yeah, it's 2941, so around 3,000.
Okay, that's not too bad.
So year to date, actually, Ethereum is down 12%.
Wow, yeah, you wouldn't think it given the amount of hype that's been around it in the last 6 months,
Exactly.
especially.
Exactly.
But yeah, coming back to these charts on the screen, then we've got SPY on the left, as we mentioned, obviously 1.4% to the 700 mark. But one thing to note is obviously we did have a bit of a double top before, but we have kind of broken that with Friday's price action. So perhaps maybe it just needs to make a couple of days extra above that. So yeah, we might get some more upside in the next couple of days potentially. Well, yeah, we'll see. We'll move on to the next slide. This is where to find us. Kaye, do you want to go first this week?
Yeah, similar to like every single week, Twitter, YouTube, and Substack will keep it very simple.
Yeah, same for me as well. You can find me on X and YouTube. Releasing a little bit more videos at the moment on YouTube, so go check them out. They're all kind of trading evergreen videos, ready for you to kind of get set up for 2026, etc. So go ahead and check that out. And with that, we'll move on to very swiftly on to the next slide. Last week's performance.
Are you sure you won? Because I feel like I won the last week. Let me see. AMD.
I did check it. I checked the last 5 days, so maybe it did count. Maybe
So funny on Seeking Alpha, AMD 5 days is down 0.03%.
I find that interesting. So I went on Google Finance and did 5 day price
Let me
action.
see. I thought I won this one. While we figure this out, finance.google.
Look at him trying to plot the win.
Yeah, I'm trying to get that last win, right? Last AMD stock price. I really think I thought I won this one. Let me see. 5 days, right? Yeah, you're up 5%. It's very weird. See, this is the part I don't understand. So weird. On Seeking Alpha, it shows AMD was down. I don't know how they're doing this calculation. On this one, it says it's up.
I don't know if they're doing it. So I guess one of the platforms is doing it with the last week of trading, whereas the other one is obviously doing the last 5 days of trading, like
All right. So
trading days, because
as
we have missed one.
correct. So I think you're fine. I think as long as you looking at the same one. So yeah, you won. Ah
Thank
well,
you, Kay. I appreciate that. 18, 13 on the year.
I gave up.
um, yeah, okay, sure. Next year is a new year, so next week is a new week.
We reset, right? The
Is
counter resets.
exactly. It looks slightly different as well. So yeah, it's just a little bit of harmless fun. AMD doing quite well actually in the recent weeks. Netflix not so much. But of course, both long-term picks sound pretty good in my opinion. But obviously, that's time will tell on that. And we
Mhm.
will be covering both of these stocks most likely in the upcoming year. So stick around and subscribe and follow and whatever you want to do. Go ahead and do that with everything that you can see on the screen. Let's move on to the next slide, which is my pick of the week. And it's Alibaba again. So I picked it a couple of weeks ago, and it didn't quite move as I wanted to. Where's my cursor? There it is. So the last 4 days, obviously, were the last week, and then the last 5 days before that were the week before. So I picked it at this area, hoping for it to kind of jump out of the trend line. Didn't subsequently do that, but I did say on that stream, of course, I wanted to remain patient. I wanted to remain patient for the break out of this trend line. Same again, really. So of course, we do have on the screen here further price action within this wedge that's coming down. But also it's important to know that this is a bit of a supply level here with this kind of blue box flowing through the screen here. So very simply, punch out of the trend line for upside. I'm looking around about 16%, which is this gap fill, kind of about 180-ish. Top of my head. You can wait for a bit of a pullback, but with stocks like this, especially when they trade on different markets, as they do in Asia, these stocks may not come down for a full retest, because they have different price action in different markets. They just sometimes that's the nature of that of the stock, because you might in some sort of way get the retest in that market, and obviously a push up. So just be careful of that if you're trading these names. Maybe size down for this sort of trade potentially. I'm not in it yet, of course. I'm waiting for the break, being very very patient here. Final point is obviously we do have the volume profile sat here on the right side. Haven't quite reached it. We did here, kind of what's that, 5 or 6 trading days ago. So that could be a nice little push off of there as we're seeing it now. Any thoughts on Alibaba, Kay, before we move on?
No, I think this is your textbook breakout trade, right? If it breaks and retest, you enter, and for the upside, if it doesn't break, then you just keep holding, keep watching.
Exactly right. Awesome. So this is what I'm looking forward to for this week. Obviously, we do only have 4 days trading. I'm not too sure what the Chinese market is doing. I can't really think about that. I'm guessing
I think it will be similar, right? I think January 1 they will probably be closed as well. That's I'm assuming.
potentially, yeah. I mean, we'll see how that kind of pans out. Should probably know more about that. Moving on to your pick of the week, then. What have we got here, then, Kay?
Well, so similar to your pick where you're waiting for the breakout, technically from here perspective, the breakout has already happened from this trend line. The all-time high for Nvidia was around the October end of October 219. After that, we got rejected and we continued seeing a downtrend. And then we had this like what 1, 2, 3, 4, 5, 6 trading days before we had this breakout. We haven't retested it. That's why I think I have a line at 196. That was the equal highs from a 1120. So you're looking at about a month ago. So I'm assuming, and the last candle is a doji candle, and with the latest news that we got that Nvidia bought Grok, which is not the Grok AI, but the Grok. This is another semiconductor where they do the designing of the chips for the inference on the AI front, which apparently is much more I shouldn't say suitable, but it's more suitable for doing that particular task. With Nvidia buying it, there is basically they have taken out the competition if there was anyone.
Hmm.
So with that news per se, we saw that big run up on Nvidia, and I think if AI play has to recover or re-energize, that's the right word, re-energize, Nvidia is going to play a big role, right? Because once you have players like Nvidia getting re-energized, that's when you will start to see a lot more movement on other players like AMD, SMH, any other semiconductor. Without Nvidia's run, they're not going to run. That's just how it is. So I want to see that we see a breakout of out of 196 because we could see a rejection at that level from the previous highs. But if we do see a breakout from there, we could easily go and test the all-time highs of Nvidia. Now I'm not entering into a position here. I already have positions built, so I'm just gonna let it run and enjoy the show. But you could, if you're looking to sell options, you I would target the 180 182 level to enter into the trade, because that's where the majority of the volume shelf is. So that's where the majority of the premium will be collected as well. So that's the option selling play. Otherwise, just wait for the breakout from 196.
It's interesting you say wait for the breakup from 196. I guess it's the safest way from where the stock is lying now.
Right,
Um,
because my entry point is very low. So for me personally, it doesn't matter because I have a long swing
mm,
trade, or you can call it a position trade. But if you're going to look at over here, and if you play the usual breakout retest strategy, then you I would wait for the 196 to test, because that is where we got rejected and a very hard sell. That was if you look at the candle at 196, that was a very hard sell. So I would I want to be a little bit more comfortable that they break 196 before I enter at these levels.
it would be really nice to see a good break of that, a good volume as well. So
Exactly.
not just break it, but kind of smash through it. And what we want is obviously that candle to close above that level, not kind of smash above it, and then later in the day kind of pushes back down below 196, because that wouldn't be very nice at all. For me, it's slightly different. I bought it at the beginning, Friday, not last Friday, but Friday before.
Okay.
So I got into it, I think, on this push out of the kind of trend line.
Yep.
So it's going quite well so far. Obviously, the momentum is there with the kind of semiconductor stocks in general, actually. So I'm kind of riding the wave for now. But I do like the kind of push out of 196. So it might be, a good time to potentially add to my position. Obviously, I have to do a bit more research into that in terms of, where the market is at that kind of point. But I'm guessing at the moment with Nvidia kind of pushing up, it kind of pushed up the market because it's the biggest stock in the world now. So it's got that kind of power, for sure. And all the time it's doing all these deals and making all these news headlines in a positive manner, then the price action will follow. Did you talk about the volume profile on the left here, Kane? Did I miss that?
No, so that's basically from an option selling standpoint, I did touch upon it. If you want to get into it, that's where I would aim to enter my
Yeah.
position at, from the volume profile, because that's where the point of control is. So that those levels you'll probably get decent amount of premiums.
That was going to be my other point if you didn't bring it up already, which is there's lots of volume here, like a lot of volume here. So if it does come back down to this kind of 182 level, a good entry, even just with shares, is not the end of the world.
Exactly.
But yeah, no, amazing pick, Kay. Looking forward to the upcoming, well, basically a couple of upcoming years for this stuff, not alone, not just the next couple of months. I've obviously had too much Christmas dinner. I can't get my words out today, Kay, but we're getting through it. We're getting through it. We'll move on then, shall we, to what have we got here? This is my second pick of the year, 2026 pick of the year. The first one last week, I will kind of, I'll say it was Snapchat, but obviously all the details as to why that is the case, and obviously we can jump into that. Well, you can jump into that by looking at last week's stream, which is available obviously on our YouTube channel. And if you scroll really, really far back on our X channels as well. But yeah, this week I've got, well, this year actually, I've got Grab. Um, I won't talk too much about the kind of everything on the screen here, but I'll just kind of glaze over it slightly, and you can kind of go away and do your own research, etc. But the part that really appeals to me is obviously the chart as well, because this is the weekly chart. So key points, obviously it's large, engaged user base across multiple services, obviously mobility, rides, foods, payments. Me and you both have experienced it, real time. I've been in Grab rides and Grab mobility as well, and I think you've been there recently, haven't you?
Yeah.
Experiencing Grab.
Yeah.
Q1 to Q3 2025 revenue up 18 to 22% year over year across all quarters, which is good to see. Growth is growth. And the tech licensing, maps, and APIs gaining steam. And of course, the last one, growth in fintech and autonomous services. You might think that they might be doing too much. And I think that's fair, but if you're making the money, there's no reason why you can't just kind of branch off in different areas. If it doesn't work, you kind of pull back. It's all part of the innovation, all part of the growth of any company, basically. And we've seen it loads of times, obviously, before with kind of Google, Amazon. They've kind of branched off and done, Amazon phones, and I don't know what Google's done, but the Google Glasses, I think they did once. They both failed. So these things happen. And the last point there is you can see analysts and investors expect Grab in 2026 to continue growing revenue and profitability driven by its super app ecosystem expansion across ride hailing, deliveries, and fintech, with improving EBITDA. And there's no full stops in this sentence. EBITDA and strategic investments in autonomous mobility and financial services, posting the company for stronger earnings and market penetration. So yeah, that's that. There's no full stops in that. I should have grammar checked that before I read it. But turning over to the chart then, this is the exciting part. Obviously, we are kind of within the cloud, the moving average cloud, which is this grey thing moving through the screen there. Obviously, the bottom of the channel ish, thereabouts, maybe $5 might be around about bottom of the channel. But if you're looking for this long term, in terms of swing trading, maybe a long term swing trade, 6 to 9 months, it doesn't really matter in terms of entry as long as you've got a fairly good one with a sensible stop loss. Stop loss in my head, of course, is just below these two lows, which is around about 480, 475. And simple upside of 42% up to kind of the top of the channel. If you want to hold this for years, you're probably looking at kind of $10, $15 in a few years. But as a kind of 2026 swing trade, definitely just looking for this move for now. Last point before I hand it over to you here, Kate, and this is the volume profile here on the right side. Very nice at these levels between kind of 480 and 520. So if we can get a push out of kind of 520, 530, then there's no reason why this doesn't just, not fly, but consistently, hopefully, make its way towards the target around 750 for the year. What are your thoughts on this one, then, Kay?
Well, I think this is a very, very interesting pick because I also have initiated a position in Grab for a while now. So I'm slowly building out the position for, and this time more with commons and synthetics with leaps. Um, in and I think for folks who have only heard about it and they haven't experienced it, I think once, if you ever get a chance to visit the Southeast Asia region where they operate, you will see why folks are getting excited about it. Something like that does not exist in the United States. What I mean by that is the super app, right? So in China, you have WeChat, you have Meituan, you have some other services that you just have one app and then everything is within that app. Whether you're buying tickets to train station, train tickets, bus tickets, flight tickets, whatever, shopping, everything is there. Similarly, now Grab is basically following the uh, same pattern. And I think most recently when I was in Singapore, I needed a lot of stuff, you didn't even have to get out of the the hotel. You just ordered food. Food is normal, right? Food and taxi is a very normal thing. But then doing grocery shopping, you needed this and that. They just went, they just got it. And the beauty is, unlike in US, where food delivery could take 30 minutes, could take 1 hour, sometimes take 1.5 hours for delivery, simple pizza. Over there, that was pretty fast, right? You if you had like a 30-minute window, they will deliver within the 30-minute window. Not all stores, most, some of the stores. So I was very impressed with the performance of Grab app. Of course, I didn't access all the features, but the features that, at least from a delivery and taxi standpoint, that was pretty impressive. And just the simply the usage, which means that you were seeing a lot more Grab cars, the delivery guys on the road, which kind of showed very anecdotal experience that it is a very popular app. And if tourists from who are visiting are using Grab, which just goes to show that how popular that app is.
Yeah, I mean, back from the time when I went to Thailand, this was 2019 actually, so it's pre-COVID, and there was Grab, which is everywhere, and we used it all the time just to get around the city. So, yeah, I mean, obviously, there's going to be loads of different kind of experiences that people have had, some good, some bad, of course. But
Yeah,
I like
no.
to think that most of them would be good.
See, I think with any service, any product, any services, there will be glitches, and there were
Yeah,
glitches within the Grab app itself. That does not mean that the growth and revenue growth and the potential for the stock move is not there. It is there.
yeah. Let's see how that develops over the coming years. But obviously, for the trade that we have on the screen here, it's mainly just for 2026 to see how it does. So yeah, that's my second pick for 2026. The first one was last week, so you can go ahead and look at the due diligence we did for that one, which was Snapchat. This one is Grab, kind of snap and grab, snap
Mhm.
and grab like that. Anyway,
Grab.
we'll move on.
That's not bad actually. Snap and grab.
There you
Okay.
go. It's an easy way to remember my picks at the end of 2026 when I've inevitably forgotten. But yeah, we'll move on to your second pick of the year show. Okay.
Yeah, let's do it.
What have you got here presented for us today?
So the second pick for me for 2026 will be Monday.com. My first pick was Rivian, so you can always go back and see why we chose Rivian. For Monday, it's pretty straightforward. Monday has been on a decline from, I would say, since July of this year. We saw the first decline in February, then we saw a little bit of a ramp up, and then we saw another decline in July. And since then, we are in a downward trend. Now, from a thesis standpoint, I'll read these and I'll give you some of my examples as well. So, benefiting from expanding enterprise adoption and early AI monetization. But basically, what it means is you are seeing the number of customers are increasing from Monday.com, and they have this feature, the AI features. They are embedding different features within their existing product, so you can now start to use those AI features by buying credits, and those credits are not that expensive from an enterprise spend standpoint. We are seeing the cash flow is improving, which, because the stock price has started going down and cash flow is free cash flow is increasing, which means that the stock is starting to get very, very attractive for institutional buyers as well. Now that's exactly what we're saying. So that's the thesis, that because the stock price has declined so much from the all-time high of $343 at that time, the stock was looking overvalued from what it was bringing. But now the stock price is in 145 dollars or so. Suddenly the fair value for this stock is $184, which gives you an upside potential of 26%. So nothing crazy. All we are targeting is getting back to the fair value. And there are and you can see the yellow, that is the gap that we are actually targeting for it to climb back up. Now the issue over here is that this chart does not tell you to start to buy the stock right away, because this
Yeah,
is currently still in a downtrend, and the thesis will break if it drops below $122. Now, from a stock performance standpoint, we could still see weaknesses until we see the broader AI play getting better. Now, if you follow all these analysts, what they are saying is like the AI play has to broaden out, which means the second, third derivatives, not just the chips. Everybody's talking about the power, and when they talk about the software, most of the retail favorites as Palantir, then you'll have Snowflake, and then a lot of people are getting into the UI path, but they are kind of missing this name, which actually is a pretty strong name in the SaaS space. And unlike UiPath, which I don't know, a lot of people, they understand how the software works. This is a typical project management software, but they're getting into the CRM function, which is a direct competition to Salesforce. They have a service function, which is a direct competition to ServiceNow. Now, those are enterprise level softwares. But then there is a small and medium sized businesses. That's where this particular software is targeting. So that is my goal, not goal, but this is my target, that we probably should see somewhere around the 185 to $200 price target by end of next year. So that gives you a good potential of 25 to 30% upside for 2026. That's pretty much it.
So in terms of downside, did you say 120?
Yeah, I think the thesis will start to invalidate, because we do want to see, because this is a base this is forming, right? So around the 184 is also the point of control where the majority of the volume is trading. Now, if it continues to see a big decline, I would be very, very careful if it starts to get towards the 120. I would wait and watch and see why, like, what is the reason for this heavy selling. So even though I'm picking it this as my second pick, I will still be careful if it continues the trending downwards.
Is this worth waiting for the next earnings report potentially or not?
I
Or
think
just have it on your watch list for now?
so. I already have a position, so I'm
Yeah.
actually going to dollar cost average. So for most folks, if you are looking into this name, I would carefully look at building this in tranches and not going all in one go, because this is going to be a risky name no matter what. This is
Mm.
much more riskier than Rivian.
Yeah, I mean, just the price action alone in this last year, you've gone from, well, actually kind of,
343 to 145.
yeah, it's just crazy. So it's a very volatile stock. So that's,
Exactly.
be careful when you're sizing with this particular name. For me, your point on the wedge, the kind of descending wedge here we've got here, the point is, interest for me, should we say, is the break of that to the upside for sure. So I will just be having this on my watch list, which I've already written down there. Obviously with the wedge in the brackets, of course. But if you just wait until essentially to just kind of break to the upside, given time, then that to me is the optimal time to enter.
Yeah.
You can even have next 3 weeks of price action if we come back up to kind of 160. I think that probably is. Then even then, I'd be considering a potential position, because the downside is only down to kind of 145, and obviously your stop loss would be there, which is about 15%, which is not too bad for a long term swing trade. So yeah, definitely thoughts to be had. I think you're right in terms of entry. Maybe wait for a second, or at least if you're adding to long term positions, maybe wait until you see some good technical indicators hitting. But I think that
The first earning reports will
first
be,
earnings report would be really
yeah,
key for me. Yeah,
that will be the key,
for
because
sure.
that will tell us the entire 2026 outlook.
Exactly right. So yeah, I've definitely want to keep an eye on for sure, and I'm looking forward to seeing how this progresses out throughout the year. Getting back to $300 would be absolutely crazy, because that's 100%. That would be ideal. Okay. So
That would be the ideal. And trust me,
yeah,
I am hoping for it, but I don't want to be too optimistic. I want to be more realistic with the swing here.
of course. Okay, so we've actually covered pretty decent stocks. I mean, last year, I don't know if anyone was here last week, but we went over our last year's stocks, and I had SMH, which I know is an ETF, and Kaye had NVDA, so it's basically the same stuff. So we wanted to go really broad, really kind of knock it out of the park, so to say, for this year. So we've gone for Rivian and obviously Monday.com for you, and then for me it was Snapchat and Grab.
Yeah,
So the way I'm going to remember that is Snap and Grab,
snap and grab.
which is good.
Because
uh,
Sean and I, we talked about it. It is very easy for me to go and pick Amazon. I know Amazon is going to be a winner next year. It's a pretty given scenario, right? I know Nvidia is going to do better, but we wanted to actually kind of target those stocks that are sometimes not on your radar.
yeah, definitely, and I think these are definitely names that are not on people's radars. That typically, at least. Before we jump into the next segment, we're going to just bring up a couple of names here. We've got Man Ram back once again. Thank you for your support. Snow Palantir Net, please. Of course, no problem. We are going to be talking a little bit about kind of what went well, what went badly in a minute for 2025, and what we're going to improve on in 2026. So stick around for that. Stick around for your picks after that, should we say? RWM from Sorrel, no worries, we'll get to that. And obviously Netflix, Nike from Ananth. And once again, Money Managed, we appreciate your support as well. So AMZN, JOBY, and Snaps. I'm actually looking at JOBY myself, so I'm looking forward to getting into that chart because it's very, very volatile, but they've got a lot of things going on at the moment, which is very, very exciting. So I'm looking forward to getting into that. Okay, so let's get up a couple of graphics here. Right, should we do what went well, what went badly first? What do you fancy, Kay?
Yeah, let's do that, and then we can quickly get into the audience request.
Oh no, I mean which one? Badly or well?
I think what went bad. Let's start with that.
Let's go with what went bad first. Okay, I guess there's a bit more of a entertaining start, I guess, for this one. Should I go first, or do you want to go first?
Go for it.
Awesome. So for me personally, I've got little notes on here on the side. For me personally, what went badly this year, I just haven't got the grips with this yet. It's quite simply over trading. Very, very honestly, and it's kind of with day trades mostly, I guess. Swing trades, I would say, probably throughout the year. I guess the type of market we've had as well has been very beneficial for swing trades. So you see a stock, you see kind of a pattern break, you see a technical analysis indicator, and you think, oh, actually, this is a great time to enter, and it probably is. But it's not always the best way because the more you enter, the more you have to track, and it just gets a bit messy. So for me, it's over trading. I've also written here for too often, just too often, like every day, for example. I'd be trading most days, therefore I'd be receiving a little bit of burnout, and I'd be struggling to focus on those particular days. So part of that for next year is obviously to kind of pull back on that and obviously focus on the days that I do trade rather than not trade. So yeah, that's for me what went badly, and that's kind of over trading, kind of trading too often in terms of days. What have you got for us, Kay?
So I think I have a very similar take on it. The what did not work well for me is that having too many positions open at the same time. So a couple examples I can share with one example. So one of the stocks was before even naming it, I was up on the call options about 500%. Now the problem is I'm primarily an option seller. So what ends up happening is I end up opening a lot of positions, and then when you open like so many positions, you have to track all positions. Now I do mostly weekly option selling with few monthly. But when you have weekly options, you just have to keep a lot of track on those. So when you end up having those call options, standard call options or standard put options or credit and debit spreads, you have to be like a hawk. And that's what ends up happening is that when you have so many positions open, even those good trades where you are up 500%, by the time you realize that you end up selling it at a 200%. Now it's still gain, but I could have sold at 500% those call options, and now I'm only selling at 200%. So that 300% was the money lost because I was busy doing other things. So I think did not go well for me in 2025. And that is just one example. There were many examples throughout the year for me.
Yeah, that's a good point there, Kay. So just kind of having a bit of focus on what you do have rather than kind of going to different things, and kind of staying on the position for too long, not always the best idea. Okay, we'll turn our attention to kind of what went well in 2025 then before we head on to kind of what we'll improve on. For me, what went well was consistency and taking profits, for sure. I think it was obviously the market was a very healthy market this year. So the swing trades that I had, and even the day trades to a certain extent, and they were kind of moving really well. So it allowed me to have that kind of consistency in taking profits. So I think but I haven't done that in previous years. So, for example, 2022, I think it was a good year. Even back end of 2020, I can't remember which year, what year is what now at the moment. But yeah, on good years, I have waited for those positions, and they've subsequently kind of pulled back, and I haven't taken those gains. Whereas this year, I've been very, very good with that, and of course, it's been a profitable year because of that. We've taken those gains. I don't have any specific examples. I'm guessing there's lots of different smaller names. You can go back and look at these kind of live streams, or just scroll back on X. But there's loads of different names. You've got Amazon, of course. Google was a massive one this year, so that's really handy. Even Rivian, to a certain extent, kind of pushing to the end of the year. I've taken profits on that. In previous years, I probably wouldn't have done so. So yeah, taking profits, especially swing trades for me. What about you, Kay?
I think for me personally, I in 2025 marks my fifth year of option selling, and I think by now, because I have seen both the bull and the bear market in option selling, well, I think I have been able to create a repeatable engine of generating income. I think that went very well. I think this year I was able to completely solidify all the gaps I have had in the previous years. So this year, my premium generation was 20%, even though, yes, we understand it was a bull market. But compared to 2024, I was up 20% on income generation for 2025. Now, depending upon how things proceed in 2026 and beyond, the key is that you have the framework
Mm.
to the T. It could be a little bit less next year, it could be a little bit less the following year. But the point is, once you operate within the same framework and you know how things proceed, it kind of gives you an idea. You're not like shooting in the dark and hoping it will stick.
Yeah, I mean, that's a very good point there. I mean, yeah, I mean, it's good, isn't it? We've had a good year overall, I think, generally within the markets, and we've kind of both capitalized on it by the sounds of it. So yeah, you've started building for the kind of almost a future. It's good to kind of have the fundamentals kind of move forward. And I've kind of realized to take money off the table. So
Exactly.
we're moving in the right direction. Okay, fantastic. What we'll do now is we'll move on to what we'll improve on in 2026. I'll go first because it seems to be a bit of a theme. For me, it's a bit of a longer one, I guess, but kind of not trading, essentially is what I kind of want to hit on here, and that's trading less. So trading less days, obviously less trades in general. So I don't want to have, for example, like 30, 40 swing trades open. I'd rather have like 10 to 15, for example. That's, hypothetical example, of course. But also not trading on certain days, not specific days, but just taking more breaks, if you see what I mean. So at the moment, I would probably trade Monday to Friday. But what I should really be doing is maybe trading where I have time. So maybe, Monday and Thursday, for example. So then when I get to those days, I can sit there, I can get my rule book open, I can focus more, and attack the market with a little bit more vigor, shall we say. What else have I got written here? That's pretty much it. So just kind of allowing that time to kind of recover, and come back stronger every time. And I think having breaks within trading, again, I've not been great at that in previous years. So maybe tying in with the fact, obviously not trading, obviously taking longer breaks when it comes to kind of having time off. Obviously spending time away from the markets, I think is key for sure. So yeah, I'm going to focus on not trading. It seems a bit counterintuitive for a trading podcast or trading stream,
Mm.
but that's where I want to take it for 2026. How do you want to improve your trading in 2026? Okay.
I think it will be very similar to yours, right? I think my focus would be selecting one engine at a time. So when I say what engine at a time is like, um, not having too many positions open. If you are selling options on a weekly basis, focus on that, but then do not open 10 positions at the same time, which are expiring the same week, because that leads to missing, different trades. And then if I'm looking into, for example, during earnings season, I tend to over trade a lot. And that's when you have a lot of positions open, and that's when you get into trouble. Sometimes you leave positions open where you lose a lot of money, or sometimes you are too late to close those positions and you basically end up losing the entire spread. So goal is to have fewer positions, stronger positions, have more clarity in the execution. So continuing to refine how we trade, I guess that's the best way to put it.
Yeah, I guess we both got kind of similar goals here for 2026, but it's slightly different in the way that obviously we trade.
Yeah.
But yeah, I think we've covered what went well, what went badly, and what we're going to improve on in 2026 quite well there. So we will make it a separate video. We'll stick it on the channel. So if you did miss this section, or you come in a little bit later, go ahead on to Trading Weekly on the YouTube, and then we'll stick it up on there for you during the week sometime, maybe a New Year's Day. Who knows? A little gift for you for 2026. Okay, then we'll turn our attention back to the charts, and we've got some audience requests to get into, haven't we, Kay?
Yeah, we got a lot.
So
So
let's go ahead and get on to those. Let me get the chart open and ready. Here we go.
first one is Snowflake.
Come on. There we go. Snowflake, did you say?
Yep. Snow. Yep.
So this is the daily chart. I'll probably just skip the daily chart until further notice. I thought I had more lines on this in the past, but not doing too well, is it? Kind of heading into the end of the year, kind of below the moving averages. A bit of volume profile here coming up as resistance.
Yep.
I think what we've said in the past is kind of 202 gap, and then there's a gap as well at 184. So those two gaps to be filled would be kind of what I'm looking at. I'm guessing it's similar to you.
exactly similar. And basically, I want to wait for the upcoming earnings. Interestingly, we have 32 down revisions on it. Now, it doesn't mean that the stock is going to do bad, but as a second, third derivative of AI play, you need to see some strong movement from Snowflake. So we could see continued pressure on the stock, at least leading up to the earnings, unless we have some sort of a catalyst that comes out where they're doing some kind of an acquisition or some sort of a news that helps the stock. But as you can see, we have this 200-day SMA slowly coming up, which you don't see it over here. But if Sean pulls that up, you can see it. Um, I would still aim for that gap because that there's a very good possibility for that gap to fill in the coming in the coming weeks leading up to at least earnings. That's what I think may happen. Um, yeah.
I'm getting there. Don't worry. There we
Yeah,
go.
yeah, yeah. But see, as you can see, and then the other SMA, which is the what 20 SMA,
Yeah.
that
So
is
the,
act
yeah.
as the yellow line is going to act as a resistance. So you definitely need some sort of a catalyst to break through that, and then above that you have the 50 SMA sitting. So strong
There's
resistance
what.
and then
Yeah.
gap to fill.
There's definitely work to be done. For sure for Snowflake. Just one last point here. The MACD is turning over quite nicely
Mhm.
with the orange line coming through the green line. So that's something to look for as well for the positive side. But yeah, the bounce off the 200 million average is pretty good
Yeah.
for now.
Next up
Okay.
is let's see what's next up. Next up is Palantir. That is in your wheelhouse.
It is, but I haven't traded it for a long time, to be fair, because it keeps kind of going up. Um, what we should have done is what we said a couple of months ago. We obviously drawn these lines for some sort of reason, sorry, circles, and we've got price action around kind of 150, kind of created the double bottom. Since then, it's kind of gone straight up. But for me, it's so hard to buy this stock. Not because of valuations and all that kind of hard, but it's the way it trades. It's very streaky, especially in the last kind of 4 or 5 months, as you can see on the screen here, kind of channeling through this sort of 150 to kind of 200 level, so kind of $50 levels. You could probably day trade this stock, no problem, but that's not something I do with this stock. So for now, it's just kind of a stock that's on my watch list, and I never really trade. So, what about you, Kay? Do you trade patterns here? Let's have a look.
No, it's getting to it's getting difficult to trade Palantir because I'm still not convinced that because see from an option selling standpoint, what the key for option selling is that you're okay with the stock going down 30, 40, 50% and still you can hold it. I'm still not able to get a handle on this particular stock. Now, if you really want me to tell you, I will target anywhere where the point of control is where. So in this scenario, it'll be 181, 80 degree, $180 would be my entry point, but it has to be a short-term trade. And I know that there are a lot of other channels that follow Palantir to the T. So they probably have a lot more experience trading Palantir. I just don't trade Palantir that much. I just stay away from it.
Yeah, I think we'll put this in the hard to trade section of the video, which doesn't exist, but we can get hypothetical. What's next?
The next is Net, Cloudflare.
Cloudflare.
I think they're
I always seem to always want to buy this stock because cybersecurity is quite important in our world at the moment, and I kind of want to get back into that kind of area. I did trade it, I think
yeah,
last year,
I like
before.
cybersecurity space, and I unfortunately I'm stuck in a ticker called Okta.
Yeah.
Until I free that up, I cannot get into this one. But this has always been on my. But this is also having a similar challenge. Like it's tracking at least in the last 4 or 5 days. It's been at the 20 SMA, hugging it very closely. But then you have the 50 SMA coming at the top. Um, this is where also where the point of control is. And then let's see for when are they reporting earnings. Similar. So first week of February, and we have 27 up revision. So seems like that we may be able to see some sort of a move closer to the earnings with the catalyst. I think earnings will probably provide a lot of catalyst. And if we want to see a really strong first half, this earnings season will have to show that companies are actually increasing their revenue, the free cash flow is increasing, they are basically paying off their debt, and the growth is there from a, either double digits, higher double digits, or triple digits, and depending on the company.
Yeah, and the earnings are reflected there on the vertical line. We must have talked about this at some sort of point, maybe a couple of weeks ago, because I've drawn a line here that comes back down to this kind of previous trend line on the bigger time frames of 160. So if things were to take a bit more of a dramatic downturn, maybe a 160 is somewhere where I'd be looking for an actual entry to this stock finally. But yeah, all valid points you just mentioned there with all the kind of support lines nearby. But we'll see what happens coming
Because
forward.
even though it says the trend has reversed, it still needs to break the equal highs from the first week of December, which is the 220. All right, 220. Yeah, 214. Sorry, 214. So until that has a very strong break to the upside and continues the trend, I am still, yeah, that's the one. Yeah, I'm
Yeah,
still a little bit skeptical on this one. Okay,
one
next
to
up,
watch. One to watch.
next
Yeah,
is IWM. I think this is the small cap, right? What is it?
it is. Yeah,
2000. Okay, yeah. We used to cover this a lot before. I remember it was in the 200 range.
yeah. Now it's 250, so it's gone up 20% since. That's not too bad.
Crazy.
Still kind of just plugging away by the looks of it. It's a bit more of a volatile index, that's for sure. I mean, with the nature of the small caps, of course, it makes sense. But yeah, it's kind of following the 20 minute range at the moment. It's not something that I trade particularly. We could jump down into the hourly chart. That might be a bit more interesting. I know we don't do that like ever, but we do have a kind of a shorter term wedge kind of playing out here. So if you can kind of draw from the top there, very, very roughly, very, very quickly, and then draw from the bottoms there. So jumping out of one of these would be really good. And of course, you've got the 200 minute average there for the hourly chart. So if that's what I'd be looking at for sure if I was looking at the IWM. It's kind of the shorter time frames because that's what I would more likely day trade than long term trade. Do you ever trade small caps in general, Kay? Or
Nope.
no?
No.
I thought not. Okay, we'll move on then.
Netflix next is.
Oh, your pick for last week, wasn't it?
For last week, and honestly, then this is right now. This stock is just hugging this level of 93 and 94 for a while, and that's where the majority of the buying and selling is happening. So majority of the volume is sitting. um, you could say that this is a good base forming. We are below the 200-day SMA, we are below the 300-day SMA. So from a long term perspective, really long term perspective, this is a great buying opportunity to build your position. From a trading standpoint, this is why I'm keeping this on a weekly, where I'm trying to get into at the 92, 92.5, 93 level, and then trying to get out within the 93, 94, 95 level. So that's basically what I'm doing at these levels at this point in time.
Yeah, for me, I actually added to my position on Monday, just gone. But I also mentioned the fact that I'm not making this a full position yet because I want to see if it can kind of come down to these levels. I think we spoke about it last week as well, actually. Around a kind of 82 to kind of what's that one, 86, so that kind of level there. It might even punch down to 80 at some point, but for now, I thought I'd have a starter position just in case it has that news kind of comes out and it punches a buck above $100. I want to be in it if that happens. That makes sense. So there's no harm in taking an early position. Just be careful of how much you put into that early position. A couple of things to worth note as well. Obviously, RSI kind of poking up nicely here, and obviously that MACD kind of turning around as well. So a couple of indicators. Like I say every week, I don't trade with these indicators, but it's just nice to get that kind of confirmation with momentum or potential momentum, shall we say, moving forward. Yeah, Netflix definitely one to watch. They're not going away anytime soon, that's for sure. Okay.
Next is Nike. Now I know this was in news
Ooh.
last week because Tim Cook ended up buying some Nike, and it's on its way to fill the gap. Um, I think the challenge with Nike right now, it's still in a descending.
Yeah, I drew this last in midweek.
Yeah, so this
This
is
massive
down
wedge.
since 2023 December. So it's exactly 2 years. It's in a descending channel. Um, at some point in time, this will probably break out to the upside.
Yeah, I would say that the wedge has actually been longer than that. We've got the
you're right. Actually, you're
Peak
right.
of it back in September 2021 on my screen here.
No, actually, if you look at it, uh, you're absolutely right.
What we need is a big Nike recovery. Here we go. Draw this. That'd be fun.
I think the challenge with Nike recovery is that their China sales are not doing very well. So from a fundamental standpoint, but
There you
um,
go. Not financial advice. There you go.
not yeah.
316 incoming.
Oh my god, yeah.
We do have fun. We try to have fun here.
Um,
But would you say so with the kind of declining Chinese sales for Nike? Would you would that be alarming for you for the long term?
it well, the problem is like these things are very volatile. The retail sector in general is very volatile. I'll give you an example. So, for example, Lululemon, on the other hand, they had a -2% in US, but the China sale is increasing. So they are gaining ground in China, but they are still not. They're still losing, customers in the US or the North America region. But these things flip because these are more. This is more on the trend side, and Nike had more structural issues since pandemic, and that's why we see this continuous decline, for a couple of years now. So this would be a good position to maintain for long term because you may be able to see those all-time highs in couple years, but you don't know whether it's going to be in 2026 or it could be 2028 where you might go back to the all-time highs.
Yeah, I mean, if you get all-time highs in 2026, they're doing very, very well.
Correct, but
Um,
for that to happen there has to be something that really, you know
yeah,
gives us a surprise which
could be
nobody.
like a
Yeah,
big business change, I would say, for that to
exactly.
happen. Which but these companies is not always um, the most common, shall we say?
Correct.
Should we move on?
Next up is Amazon. Another, I mean, man, this
I
was
know.
actually, I was debating should I choose Amazon as my 2026 pick, but if you think about it, for all the Mag 7, this is the probably what 5-6% year to date return. Let me just confirm. So in 2025, you only had like 6% return on Amazon. The year started with 219 and you're sitting at 232.
Wow.
Unless you bought the April dip, which was 167.
Yeah, that's
Uh,
one hell of a dip, isn't it? I
correct.
mean, coming out of this trend line now is very, very appealing. I started the position, um, actually, to be honest with you, a couple of weeks ago because I got the lines not wrong, but just they were drawn differently at the time. So I thought it was breaking out. I think it was this bit here when I was like that, and I thought it was breaking out there. And to a certain extent, it kind of was. It kind of broke out and kind of retested a few times in a very dramatic fashion. But obviously, with these kind of stocks, you have kind of looser stop losses because they don't move as much as the kind of the Palantirs and the Snaps and all that kind of stuff. So it's yeah, I'm in this stock. Are you in this long term? I'm assuming you are. Are
Yeah, yeah.
you looking to add to any point?
No, I have a full position built out already on
Mm,
Amazon.
okay.
So I am not going to add any more on it unless we see those prices of 150, 160. Then it's too hard to pass. But at these levels, I'm just sitting on my full position on Amazon.
Yeah, I think Amazon should have a good 2026 for sure. Is
Yeah.
there any headwinds that could potentially hit this that you can think of, apart from maybe competition or again even competition? They blow it away every time, don't they?
I mean, there. I mean, I know that one of the pluses for Google was that their Google Cloud was, the market share was increasing for Google Cloud, and the AWS was going down. I think the challenge is that I think they are probably behind on the AI front in terms of the cloud infrastructure compared to their competitors like Microsoft or Gemini, sorry, or Google. The other one is they don't really have their own LLM, whereas Google
True.
has its own LLM. Microsoft partners with OpenAI. XAI has its own LLM, which is Elon Musk. So that could be one of the weaknesses. But what if they buy Anthropic?
They're going to buy someone, aren't they?
If they buy Anthropic, which could be a possibility, you might see a crazy run in Amazon, just like you had in Google. Like a lot of people who jumped on board on Google this year, and they suddenly became AI experts on Twitter.
Yeah.
All of those people were saying Google is dead last year. You can
Yeah.
go back and check our channel in December last 2024 December. We called Google. We said, listen, it doesn't make any sense. Google is just because you think OpenAI launched a web page and they started doing search and suddenly Google is going to die. I mean, that was just the most insane,
Yes, it was never going to happen.
yeah.
Google's way too big for that.
And I think the same thing with Amazon. AWS is just in a different league altogether compared to Google Cloud. And a lot of people who are not technical enough, if you use Google Cloud, see, because a lot of companies who move to the cloud, right, they are using a lot of vendors, the software vendors. So they install the software, stack on these clouds to run. Now, in general, you ask for folks who actually are in the cloud space who do these configuration and implementation, you will realize and you will get to know it's actually the infrastructure of AWS is much, much better compared to the Azure, compared to the Google Clouds. Troubleshooting. That is just not reflected in the narrative on Twitter, and because most folks they are not technical enough, they just reiterate the same thing they have heard over the years. But that doesn't mean that they are not gaining ground. They are gaining ground.
Yeah,
So,
yeah, they've got the capital to do so.
yeah.
Let's move on then to Joby.
Joby, yeah. What does Joby do? I've heard the name, but I don't know what it does.
They're in aviation. I couldn't tell you the exact specifics, but they're in aviation, and they seem to always be very busy. So if you don't know, I work in aviation, so I kind of know ish
Oh,
roughly. I'm not insider trader or anything. I don't work for them, but I get news and updates and stuff like that, general news and updates, and they always seem to be in the news, and not for bad reasons in terms of kind of acquiring things, getting money here and there, making deals, and it's kind of reflected actually this year in the stock price by the looks of it, because this is the beginning of the year back in January, of course, and then up. So let's have a look at what the yearly return is.
yearly 70%.
70%, and it went all the way up to at one point 150, 160% at one point. And quite obviously here we have a bit of a double bottom, but obviously coupled with just declining trend line. You could even draw it maybe there. I'd have to play with that a few times, I think, to kind of get that spot on. But declining wedges often act as a bit more like a bull flag. So you're kind of trading upwards and you get a push upside and you get a really nice push to the upside. So it might be worth looking at this one. I'm not looking at it just yet, just because it hasn't got anywhere near this sort of area. And if it was to kind of hypothetically break here, go up to kind of all-time highs, to literally kind of 35%. It's probably not all-time highs, is it? It's probably one of those stocks that did really well in 2020. Oh no, it is. Yeah, it is all-time highs. So yeah, if we can get a bit more stability in the kind of fundamental side of the stock, again, we'd have to do a bit more research, and you should be doing your research too, not UK, the viewers, although you should be doing your research.
Right.
But
Absolutely.
yeah,
Yeah, I mean,
um,
all the ideas we are just giving you our own perspective. That doesn't mean that that's the right perspective. That's just one perspective, and everybody should be, doing their own research. Because end of the day, it's your money. You're pulling the trigger. You will own the consequences, whether profit, loss, right? All right.
mm,
Next one is Snap, and
uh,
and I have to say,
SNPS.
yeah, before you go ahead, I have to say, after you did the pick, I'm
Oh no,
like,
this is not Snap. It's SNPS. Synopsis.
no, but I think somebody asked for Snap. Oh, it's NSPS. Oh, right, right, right. Oh, you got me excited for Snap. Anyways, um, for Snap, actually, I am looking to do a swing, and hopefully you win, and I can make some money.
Yeah, so I'm looking at the leap options
Yeah, exactly.
for
I'm
January 28, and I'm looking
exactly.
at
I'm
them.
doing
I'm licking
the
my
same.
lips.
Yeah,
Yeah,
yeah, yeah,
for
yeah,
you. Yeah, yeah.
yeah. Okay,
We'll
go
talk
ahead.
about that after the stream, sorry. So SNPS synopsis. I don't know what they do, but we have
I'll tell you.
covered them before by the looks of it. Um,
Synopsis is, I think my friend works in Synopsis, if I'm not wrong. Yep, yep. So they provide design IP solution in the semiconductor and electronics industry. It operates in two segments: design automation and design IP. So they are based out of California. Yep, my friend works in Synopsis.
it's a tricky one to kind of get into here because it's kind of had its bounce, had its time. What would have been nice is if whoever brought this up
It was money
Uh,
man.
Money managed, a trusty money managed. If you could have brought this up maybe a month ago, that would have been ideal, because we've had a bounce at this kind of level of 378, and since then it's made a quite a beefy move actually. From if you got it right at the bottom there, 25% up already. It's just very tricky to buy here because you've got all these kind of contact points that will act as resistance. They might act as resistance in the shorter term, of course, but in the longer term, you'd be looking for it to kind of pump back up to kind of 600, 700 in the coming years, I would say, not so much months, but it's tricky to get into now. So let's have a look onto the daily time frame.
While you are looking up, so one thing I realized is for synopsis, they are actually trading under the 200-day and 300-day SMA.
Yeah, that's literally what I was about to say with what just popped up on the screen there. You can see 200 just above. So would you be looking at price action to come back above 200 and hold?
I mean, both 200 and 300, because there is actually a very massive gap between the level of 603 and 517. Look at that. If you remove the moving averages, you'll see that massive gap.
Hang on, I'm just trying to get another EMA on here.
Okay. So with
I
this
can't
up,
find it. There we go.
yeah, with this uptrend, if you're targeting that gap up, and that might be the play here.
So white chart.
That give you about a 26%. Um,
So the 300 is the white line on the screen now.
right.
So
So
what were you saying? Sorry.
no, so you if you remove so you see that the gap down.
This one.
Yeah, you see
Yeah.
that big gap. I think that's what we are targeting.
Yeah, that makes sense. All the way back up to 600. That's
Correct.
still a good 23%,
That's 26%. That's right,
26%.
26%. Yeah,
But would you, I mean, I would have to wait for it to get back above the 200 move average to kind of get
100%.
into that.
You want the confirmation of breaking 200 and 300, because generally what ends up happening, like a 20 SMA or a 50 SMA, they are much easy to break compared to the 200 and 300, because that's just, the longer the moving averages are, the difficult it is to break. You definitely need a lot more catalyst. Doesn't mean you can't break it, but you definitely want that confirmation. Now, if you
Yeah.
have positions in there in synopsis, then I'm assuming you'll just continue to add and aim for that, because the trend has definitely reversed. Unless
Yeah. I guess if you have a position, if you're looking to add, then maybe adding the kind of gap fill to the downside here would be a good idea.
correct,
Um,
and
but
515 is the equal high, which you definitely want, because if it can break the 515, that area, then I think we are in a very good spot for it to begin the trend back up. But this chart looks very similar to ASML, by the way.
that's interesting. But moving together, that kind of break there would be nice.
Yes.
Okay, one to keep on the watch list for sure. We'll move
Next,
on to the next one.
yes, next up is BMNR. So this is the Ethereum Tom Lee
You
Bitcoin.
like this one, don't you? Is that right?
I do like it, but the problem is that I'm not that well versed with the whole crypto world. I
Not
did.
very nice price action.
Yeah, it's crazy. It's like, now, what the latest news that I heard on the front was that the company BMNR, they have staked their Ethereum, so they will start to get some, I guess, dividend on Ethereum. Like when you stake, you get some money on that. We haven't seen any major price action, but see, the stock was trading around the high 60s, and now we are in the 20s. Um, so giving pretty good, option premium. That's why I was selling it. um I do have some small position in it, so I'm just basically waiting for it to recover, because I'm in a loss. But I think this is very closely tied up with the Ethereum price. So if Ethereum is back to the 4,000, 5,000 level, or whatever level it was, I think we'll probably see again the price increasing. While you do the technical, the other pieces that I'm reading about it from the Twitter channel, is there a lot of people who are claiming we'll see $100 on BMNR for 2026. So
Yeah, I mean, it's one of those things that if you allocate maybe 0.5% of your portfolio to it, then it's not going to change it. But if it goes up, what would that be? 200%? No, 300%?
if,
Just
at
over
20,
300%.
if it goes to $100, so let's just say if it goes to $100, you're looking at 245% gain.
And if you manage it throughout the trade as well, you might even be able to add through it at certain points. Maybe if it stabilizes itself, then you can turn that kind of 300% gain. Guessing kind of where you're adding into a 200% gain, but actually that could then turn into kind of 6-7% of your portfolio because of that incredible move that's been made.
Exactly.
But yeah, very hard to manage that position if that's the case. But yeah, I think maybe starting slow. I'm interested in this because I always like a little flutter
Yeah,
here and there with these kind of names.
and names like these, when they move, they really move.
Exactly, yeah, exactly. You can see it on the screen even just here. It went all the way up to kind of 120 from something like $4, which is
Exactly.
obviously a crazy move, but that's not going to happen every year. But just shows that these stocks, they can move when they move. We hope that helps you there, Verla, just like it kind of has. You're very, very welcome. Make sure you come back. We've seen you before in the past, so I don't think we've forgotten you. But yeah, we'll
Next,
move on to the last stock of the day. I think it is VRT.
BRT. Yep, that's the
We have
last.
run over quite substantially as well. I just realised that, but it's okay. I'm in no rush. But yeah, VRT, we've obviously done some sort of technical analysis on this before. We've got a couple of lines on the screen here. Vertiv Holdings, what do they do, Kay?
They do electronic. They are electronic components and equipment. So they design, manufacture, service critical digital infrastructure, technologies, and life cycle for data centers. So it's data center communication networks, commercial, industrial environment. So again, I think this is going to be those that AI play. It's going to be the pick and shovel of AI play.
Looks as though the indicators on the weekly are not looking brilliant. But I mean, you've got the good stability of the actual main ones, which is the moving average. Bit of support down below, kind of 145-ish, 150, you could probably say. But the actual momentum indicator is not looking too good because the RSI is kind of broken down. It doesn't mean a huge amount, but it's just worth keeping an eye on. And the MACD, of course, kind of crossing over to the downside. So yeah, tricky. I mean, if you're in this stock and you're holding, obviously congratulations, first of all. But where to add, I'd probably look at 145, 150 personally. But I won't be starting a position there. It's just not really not the chart I want to see just yet. At least I want to see it mature out a little bit, maybe spread out its wings
Yeah, and then
slightly.
if you actually draw the trend line, right? I mean, it is definitely trending down.
Yeah,
And in
actually, it's
your
a bit of a bull flag. Actually, thinking about it. So we've got this like that.
right,
Draw that there. So we've actually had really good price action coming up, and it's kind of travelled down. So that's a bit of a bull flag. So if we get a break of this top side action, then we could see even above 20, above 200. Sorry. Yeah. Sorry, I kind of interrupted you there.
no, 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 absolutely, it's fine. I
I'm used
see.
to it by now.
Yeah, it looks interesting. I don't think.
Because it's had a bull flag already, even in this one move, because we've had it here as well. Look.
And then on the, I usually don't use this indicator Bollinger Band, but on the Bollinger Band, this is actually smacked right in the middle. So the next catalyst, unless I'm wrong, will be the earnings, I'm assuming, and that will be in the first week of February. And if we have some sort of a massive run going on in the AI space, led by NVIDIA and the others, you will see these second pick and shovel plays actually gaining a lot of momentum because of those. And then if your earning comes out spectacular, then guess what? We'll be
And
go ahead February
uh,
and yeah.
and I think mentioning the fact, obviously, I mean, last year's pick for me was SMH. Having that kind of thought around having these, semiconductor kind of plays, if the video moves up, that's really, really nice. But of course, ASML, TSM, AMD, even Broadcom to a certain extent, they could all move up quite nicely, and that's obviously all part of SMH as well. So it kind of pushes it up even more. So if you wanted a little bit more exposure across the whole industry, then perhaps making a move into kind of an ETF would be the best way possible. The safest way possible and inverted commas, shall we say. So if you're not quite sure which stock to pick, then maybe that's a route you'll need to go down. or want to go down, should we say? So you've got SMH, and I think you've got SOXL. I think off the top of my head,
That's
there's
right.
another
You're right. Absolutely.
another
Like one of the
semiconductor ETF.
like one of the picks for me, at least from the semiconductor, was the ASML when it was in the low 500, low 600. That's when I started adding on it. I built a decent position on it, so I'm sitting on a good like 30-40% upside for a long term, and just keep holding it. Eventually, they'll do a stock split, and I'll have enough shares to sell covered calls.
Awesome. Yeah, that's all about management here, people. So that wraps up the last stream of the year. It's been a really, really fun one. We talked about obviously the normal market bits, and we had our stock picks of the week. I've got Alibaba, and Kay's got. What did you have for the week, Kay? Sorry.
Nvidia.
NVIDIA, you had a video for the week, which is actually looking pretty good as well. And we had our second stock for next year as well. I had Grab and you had Monday.com, last week's picks. You can go and see the kind of breakdown analysis for that. I had Snapchat and you had, what was it? You
Rivian.
had Rivian, yeah, of course. Yeah. How can I forget that? So some really good stocks out there, really good analysis, I think, as well. So let us know your thoughts in the comments, whether it be here or on YouTube, of course. Let us know. Obviously, thank you very much to every single one of you that have viewed us throughout the year. We have actually a few today here in the stream. We've got Man Ram, Money Manage, Sorrel, I think I've seen you a couple of times, and Verla, amongst many others that have popped in throughout the year. It's been really fun. We've had our breaks when we've had them because we've been away. We have lives, of course. That's what happens. But ultimately, I think trading has taken the first step on this channel for sure. I think it's been a really good year for both of us, and I'm really excited to head into kind of 2026. Would you carry that through there, Kay?
Absolutely. The same sentiment. Thank you, all the viewers, for all the feedback, ideas. We have learned a lot from you guys, and hopefully, you learned something from us as well along the way. Hopefully, we provided some value to you guys for your time, right? You're spending 1 hour of your time with us every single week. So, we do appreciate that. And with that, I'll say Happy New Year. And hopefully, 2026, you get better, you make more money, and your portfolios are in super green, because that's what we all want.
Exactly, and obviously the biggest thank you of the year as well goes to Wolf as well for letting us use the platform. We couldn't do without you. Really appreciate the support that you've given us throughout the year and hopefully for years to come as well. But for now, we're signing out for 2025. We both wish you a very happy 2026, and we'll probably see you not
Thanks.
next week because I'm in Spain, but a week after, a couple of weeks' time. Get us a bit of time to kind of mature our trades and have a look at what's up for the year ahead. So take care, everyone. Make sure you trade safe. And Kay, I'll see you next year.
I will see you guys next year too. Take care.